Hey traders, this is your stock market outlook for the week of September 6th. Remember, it's a holiday on September 5th, so no trading in the US or Canada for stocks. Most of the health indicators have turned negative this week. That means I'm going to be very cautious deploying capital on the long side. If you see a really quality setup that you really like, consider trading it, but only with a small amount of capital, or less than what you would usually use. And I just want to limit the amount of capital I have exposed at this time for the reasons we're going to discuss in this article, or in this video. So we can see the indexes. We got the US and Canadian indexes up here, NASDAQ, the NYSE Composite, the Russell 2000, the S&P 500. Each one of these looks at a little bit of a different segment of the stock market. And then we have the Canadian indexes over here. And we can see pretty much same story in all of them. We had a nice run higher, and we're in a pretty sharp pullback right now. I don't really want to determine whether this is going to go higher or lower from here. All I know is that right now we're in a bit of a no man's land. I don't know whether we're going to go higher or lower. So that just means limit my capital exposure. The stock market health indicators, same thing. This one's actually a negative. Should be flipped upside down. Don't like it. Don't like this one either. And same sort of thing. We're just seeing some negative stuff from the indicators. It's generally much easier to swing trade on the long side when this indicator is above the 50 level, and that just means at least 50% of stocks are above their 50-day moving average in short-term uptrends. And this alone would have kept you out pretty much of this entire decline. And along with the other indicators, we haven't had too much to trade on the long side during this entire decline, which is a good thing. And this one also negative. We had this huge drop, single day drop of about 3% back on August 26th. And big single day drops are generally not conducive to uptrends. That's downtrending behavior. And we can't really see too much in here. We just have these big drops that are just warning signs, and when we have those warning signs, better to stay out for a little bit. So that one's negative. Let's drop down to this one. This is upside volume divided by total volume, and was starting to look a little bit good here. We had some really big upside days back here and near these lows, which helped fuel this rally and indicate the bottom. And now we're seeing a bit of the opposite, where we had this really negative day where almost all the volume in stocks for that day was in downward moving stocks that were moving lower on the day. So that's not a great sign. Advanced decline line was doing really well. You can see the S&P is way below its late March, April highs here, and the advanced decline line had moved above its April highs. So that was a really good sign. That usually positive divergence indicates upside in the indexes, but we have started to weaken recently, and if we start moving back below these prior lows on this index, then it's basically gone back to neutral or negative. So this one's decent at the moment, but pretty much everything else not looking so good, which just means I wait for a little bit more upside before exposing a lot of capital on the upside. So here are all the levels that we just basically discussed for these indicators. And the ultimate indicator is how many setups we're seeing that are working. If I see lots of setups, they're working well, but the indicators or the indexes aren't really doing that great, I'll still probably take trades because the trades are working and they're making me money. But if right now the indexes and the trades I'm seeing are all pretty much telling me the same thing, I'm not getting a lot on my scan list. This week again was pretty small. You can click to see the new scan list there. And yeah, there's just not a lot that I'm seeing. So that's not encouraging and will naturally keep us out of trades because there's just not many trades to take. So our capital deployment is going to be pretty low. Sectors on the move, everything got hit this week. I'm not a big fan of trading utilities and defensive stocks. They don't really move a whole lot, not really conducive to my strategies. But if I see a good setup in them, I will. Over the last month, energy was the only thing that held up. And over the last 3 months, other than the defensive sectors, which are consumer defensive and utilities, consumer cyclicals, industrials, healthcare, and technology were the top performers. So still, most of my trades that I've been looking at have been in those type of sectors. What am I doing right now? Just scanning. I did run a scan list this week. As you can see it there. And also on the blog, not a whole lot on it. You can also check out the best swing trading stocks list. This is just really high momentum type of stocks that have been really strong over the last couple months. And you can form this up with the trend, pair this up with the trend ATR strategy. So a couple other options for finding trades there. So stay safe out there this week. A little bit of a mixed outlook, and gonna hold off on taking too many trades on the long side for now. Until next time, happy trading.